Dear friends, welcome to Weekly View on Markets. This week also, markets have traded in a small range. But one good thing is that markets were not deterred by the Israeli and Hamas conflict. Macroeconomic data like IIP numbers and inflation numbers, which has come out during this week, were very good and they have supported the markets. I have looked at the charts. Charts do not show any weakness. Dips in market should be used to accumulate good quality stocks. Risk reward ratio is in favor of large cap stock at present. So investors can look at picking up good large cap stocks. Charts indicate some more consolidation for the coming week as well. Also keep an eye on geopolitical developments in Israel and Gaza Strip and also the quarterly results coming out in the next week. Now let us look at indices performance during this week. Nifty closed at 19,751, up by 98 points, closed with a gain of 0.5% for the week. Bank Nifty lost 73 points, closed at 44,287, lost 0.16% for the week. Midcap index closed at 40506, up by 221 points, gained 0.55%. Small cap index closed at 12,894, up by 57 points, closed with a gain of 0.44%. India VIX is more or less stable at 10.61. So if we look at, there was weakness in the banking sector. Otherwise, Nifty index, mid cap and small cap all were in consolidating position. Let us look at sectoral performances for the week. Most of the sectors have gained except few sectors during the week. Realty sector gained around 4.3%. Auto sector gained around 2.84%. PSU stocks gained about 2%. FMCG stocks gained about 1.83%. Energy, commodities, consumption, oil and gas, manufacturing, infrastructure all were up by more than 1%. PSU banks lost around 3.24%. Information technology stocks lost about 1.65%. Consumer durable lost about 0.60%. Most of the sectors were consolidating and there were more advancing stocks than the declining stocks. Even though market was in a consolidation zone, there were many stocks in the small cap and mid cap sector which have gone up considerably during the week. Now let us look at technical charts. This is the daily chart of Nifty. As we can see, Nifty has maintained above the support level. This line was drawn in the previous week. I have not made any change. So Nifty came around this support line and from there it has pulled back. As long as Nifty remains above 19,500 levels, there is nothing to worry. The trend is intact. On the higher side, Nifty has got resistance as shown by this at around 20,200 to 20,250 levels. And market is likely to trade within this range for the next week also. This is the chart of Nifty Mid Cap Index. Here also we can see the Mid Cap Index is trading in a small zone, and now it has reached the higher band of the resistance. If the index takes out 40,700 levels, we'll see a rally in the mid cap index. This is the chart of Nifty small cap index. Small cap index is consolidating, but it is forming a uptrending channel. So this channel, the support level is at around 12,600 and resistance level is at around 13,000 levels. So if Nifty small cap index takes off 13,000 level resistance, then we will see a further rally in the small cap index. Till such time, it will consolidate. This is a chart of Bank Nifty index. I have drawn this channel few weeks ago, and typically it is consolidating between 46,000 on the higher side and 44,000 on the lower side. And many banking results are going to come out. HDFC Bank result is coming out on Monday. That will give a direction to the banking stocks as well as Bank Nifty. Watch out for HDFC result on Monday. Now let us look at some of the fundamental factors of the market. Automobile sales data for the month of September 23 have been very encouraging. As we can see, two-wheeler sales have gone up by 21.68%. Three-wheeler sales have gone up by 48.58%. Passenger vehicle sales have gone up by 19.03%. Only tractor sales have dropped by around 9.66%. Commercial vehicles sales has gone up by 4.87%. Overall, the auto sales have gone up by around 20%. It is always said that the auto sales gives a leading indication about the economic growth. So whenever auto sales are going up, we will see a good growth in GDP in the coming year. Based on the auto sales, we can expect a good GDP growth for the current financial year. IIP numbers for the month of August 23 was declared, which has shown a growth of 12%. It is one of the highest growth in the last 3 years in IIP numbers, which is quite good. And retail inflation data has cooled down to 5.02%. It is below the RBI tolerance band of 6%. So growth in IIP date numbers, that is growth in industrial production, and at the same time cooling down of inflation is a very good news for the economy. That is why we have seen the Hamas and Israel conflict did not have big impact because the market was supported by good IIP data and retail inflation numbers. One more good news is that IMF and World Bank have revised India GDP estimates upwards for the current financial year. So RBI has projected around 6.5, and many other agencies had given 6% GDP growth. Now they are revising it towards 6.2, 6.3. So in any case, we can expect more than 6% growth for the current financial year. That is why we see a lot of stability in the Indian market despite geopolitical tensions on a global scale. RBI dollar reserves is at 584.7 billions. It is down by around 14 billions in last 2 weeks. Rupee is weakening. Rupee had crossed 83.3 levels, and it is believed that RBI has sold dollars to stabilize rupee. That is why RBI dollar reserves has come down, and accordingly, rupee is at 83.26. Dollar index is remaining strong. It is at 106.67. So there is no particular problem with regards to Indian rupee or Indian economy. Due to global geopolitical scenario, there is a strong demand for US dollars, which is a reserve currency. And with respect to US dollars, all other currencies are weakening. Along with that, rupee has also weakened, and RBI has intervened to stabilize the rupee. That is why we see the foreign exchange results down by around 14 billion US dollars. Gold price is at around 59,425 for 10 grams 24 carat. Another red flag for India is that crude price, which has at around 84 level, has jumped to 90.80 in this week due to the conflict between Hamas and Israel. Whenever there is a war-like situation, immediately the crude prices goes higher, and higher crude price is not good for Indian economy and for the Indian stock markets. FIIs have sold around 2,199 crore during this week. On 2 days, they have bought some, but overall for the week, they are net sellers. The FII selling is coming down, and on few days they are buying also. That is good for Indian markets. Domestic institutional investors are buying continuously. They have bought 3,940 crore in this week. IT sector results, that is TCS, Infosys, HCL Tech, have given their second quarter results, which are very tepid. However, companies are hoping for better growth in the second half of the financial year. It may be a good time to look at some of good IT stocks and accumulate them for a long-term view. SDFC result will be declared on Monday, and this result is the first result after merger of HDFC and HDFC Bank. We will have to wait and watch this result, which will set the direction for the banking sector as well as also for Bank Nifty. Israel Hamas war has no big impact on Indian market so far, but we'll have to wait and watch how all other Islamic countries will view these developments and take action. So if it escalates, then we'll see pressure on oil prices, and also we'll see pressure on Indian rupee. Accordingly, RBI forex reserves, and then the inflation scenario in India. So these developments have to be watched, and markets will definitely react to these developments. Indian macroeconomic parameters look quite good, and growth prospects are also strong. So that is why I advise investors should stay invested. Mutual fund investors should continue their SIPs and should not get worried about day-to-day volatility. We have seen 1.5 year back when Russia-Ukraine conflict started. Those investors who have continued their SIPs and investments through that period have been benefited. That is why whenever there is a volatility due to external factors, it is good time to remain invested and continue SIP investments so that you get good returns once the volatility subsides. Basically, macroeconomic factors and Indian companies are doing very well. GDP growth of India is going to be good. We should have faith in our economy, in our democracy, to use the volatility or the dips to buy good stocks. Continue your SIP investments in mutual funds to get good returns and benefit from India growth story. This is all for this week. Friends, if you like my video, subscribe to my YouTube channel. You can like and put your comments. You can ask questions which I will reply. We will see again next week. Thank you.